All right, welcome back, Red Door family and friends. My name is Chris Knight, Business Development Manager here with Red Door Property Management, and I am joined by who everyone already knows is Mike Taylor, broker owner of Red Door Property Management. Mike, welcome back.
Thanks, Chris. How you doing today?
I'm doing great. I think we're gonna have to update some of these backgrounds though. I've got to move
Right.
positions. I've got to get into I don't know the living room. I don't know. We gotta change this up.
Spice it up a little bit.
You know what? I spoke too soon. We are talking about jumping into the podcast studio
Yeah.
to start doing some of these market reports. So actually, I know so many of you have attended these market reports. They should only improve as we go on, as we introduce new studio options, as well as what we are adding this month, which we are about to jump into right now, which is going to be huge. I think this is a sweet addition to these market reports, which is going to be specific economic data for the Indianapolis and surrounding suburbs around Indianapolis. So today, I was going to personally highlight some of the hot numbers that real estate investors like to hear about some of the economic growth, population growth here in the Indianapolis area, and why Indianapolis might look like a great area for a new or experienced real estate investor, which Zillow, by the way, let me rattle off my first fact, is Zillow is listed Indianapolis as the fourth best real estate investment area to look at for the foreseeable future. So there's your first fact. We're about to jump into this. Mike, anything you want to mention here on the front end before I hijack everything?
No, I just think I'm super excited for this new portion of the podcast. I think it just goes right along with keeping up to date with the market trends in terms of rental rates, number of homes on the market. It just goes hand in hand with that. And from an investor point of view, we're going to pluck different facts and news articles to keep you up to date as far as what's going on or what's coming in the future, what's getting planned, just to kind of everyone can get a frame of reference for where we are headed for the rental market, and so you can make educated investment decisions. So I'm super excited for this part.
Exactly. Yeah. Educated financial decisions, educated investment decisions is exactly what we're
Yep.
trying to help you achieve. So let's jump in. I'm going to go ahead and start with highlighting some of these important factors that are happening in the Indianapolis and downtown area. So without being too boring on rattling off some of these statistics, a lot of these are going to be super important, but I'm pulling this data from realwealth.com. So thanks for them compiling a lot of this information that we're going to use here today. So number one, jumping into major employment sectors for the Indianapolis area, which if you live here, you're probably aware of a lot of these. If you're out of state, like a lot of investors are, you may not be. So manufacturing, pharmacy, which, by the way, the pharmaceutical industry here is the largest biopharmaceutical sector in the United States, is right here in Indianapolis. Sports, we have Colts. We are also, which a lot of people didn't realize, and I'm not even sure I did, to be honest with you, which is a little bit embarrassing, is that Indianapolis is the NCAA headquarters. So that's huge. Of course, Indy 500 professional sports teams like Colts, Pacers, and best of all for your real estate investor is Fortune 500 companies like Eli Lilly, Anthem Health, and Simon Property Group all contribute to a very diverse economy here in the Indianapolis area. Now, in most of Indiana's large metro areas, including Indianapolis, rents have increased over 30% from June of 2020. That's a 30% jump from June of 2020. That's absolutely huge. The city also accounted for about 48% of new multifamily permits in Indiana through 2023. So a massive amount of multifamily, which we're going to get into some older multifamily information here as we get into market reports. So you definitely want to stay tuned for some of that. Now, this one, I love this little fact here right now. Over to project a 10-year projection rather for the Indianapolis area. Indianapolis is projecting a 42% rent growth over the next 10 years, which is 1% over the national average. But even more importantly is what demographic is being driven here to the Indianapolis area. A growing young professional population of 20 to 34-year-olds is fueling Indianapolis's rent growth. The growth for this demographic is expected to increase by 0.4% in Indianapolis, in contrast with a projected decline of 0.4% nationwide. And the reason I think that this is super important is that your primary rent demographic is absolutely going to be in the 20 to 34-year-old. They are just getting started in their job growth journey. So they are very unlikely to be looking for purchasing a property, but rather renting a property until they find some foundation in their career. Jumping into some other economic news here, we've got a 13% change in population growth from 2010 to 2021. So the last census, which is 70% above the national average. That's massive.
Wow.
That's huge. The Indianapolis metro area's population is booming. It has grown by 13.1% in the last 12 years at a rate of 1.2% per year. Most important part I wanted to highlight about this section here is the growth, the strongest growth per county here in the Indianapolis and surrounding counties. Growth is strongest in the following counties. Hancock has grown by 3.7%. Hancock County is going to be McCordsville, anything on the east side of Indianapolis, the county to the east, rather. So that county has grown by 3.7%, the largest growth in any county in the state of Indiana in 2023. Boone County, which is going to be Zionsville, Whitestown, Lebanon, has grown by 2.4%. These are counties that I absolutely expect continued growth to continue in, especially as much as we tout Lebanon in that corridor right outside of Indianapolis in the northwest side of Indianapolis. Hendricks County, and so these are just following as second and thirds. Hendricks County at 1.8% growth, Hamilton County at 1.7% growth, and following in not fifth but sixth place is going to be Johnson County, which is going to include Greenwood at 1.3% growth. Now, to meet housing demand, industry experts estimate the metro area will need to build between 66,000 and 115,000 new units by 2028. So experts absolutely would agree that the Indianapolis area is going to continue on an incline of growth over the foreseeable future. Now, to wrap up the Indianapolis, I'm going to talk about some important developments here in the downtown area. These are incredible. One in particular I'm super excited about because my family happens to be super devoted to the soccer athletics. So here we go. Signia by Hilton in Indiana Convention Center is expanding considerably. Slated to open in late 2026, the new hotel and expanded convention center will significantly boost Indianapolis's capacity to host large-scale events, which continue to be Indianapolis continues to be a hub for these type of things like Comic-Con. All of these major events that are continuing to happen in the Indianapolis area should only open even further with that expansion.
Yeah, tons of conventions here. And have you seen a rendering of that hotel? It looks really, really cool.
Oh my gosh, it's incredible. Yeah. So the next one, which everyone is already aware of, Indianapolis is the hub for the Indianapolis Motor Speedway and the Indy 500. So there are continuing expansions there with the Indianapolis Motor Speedway Museum that's happening. Here we are, 11 Park. Now, I think if there's anything valuable to know, it's that there's about to be a 20,000-seat stadium for the Indy 11 soccer team that's continuing to develop here in the Indianapolis area. It's now going to have its very own stadium that's going to be used as a mixed-use development center here in the Indianapolis area. This is a $1.5 billion mixed-use development in the Indianapolis area, and it is slated to open in 2025.
Wow.
This is awesome. And if you get a chance, you should absolutely look up the graphic for what this AI has determined this development to look like. It's incredible. So it's awesome.
Is this the one, Chris? Wasn't there some back and forth between the owner of the Indy 11 and then the mayor, and there was like a little bit of the infighting? Which one got approved?
So at the latest news is that the owner of Indy 11 was finally won that battle. So it is slated, and they have supposedly already broken ground. So cool. Will there be any delays or halts? As there are some people that are fighting against it. They think it's a waste of money, so on and so forth. But as of right now, it is approved, and they have officially broken ground.
Those renderings, I saw, they look really cool.
Absolutely. And if you already own a home in that area, the potential for Airbnb use in that space should continue to grow. last, and I'll wrap up and I'll let Mike take over his articles here. It's Circle Center Mall redevelopment that's happening now. Circle Center Mall has kind of been a ghost town for some time, and they're finally going to have some redevelopment happen on it. It's a $600 million project, and it's slated to transform the aging mall by demolishing the interior corridor and replacing it with open air spaces between Meridian and Illinois Street. So there's a tremendous amount of redevelopment growth, and I certainly would get excited about anything sports stadium being constructed, because that's only going to bring more tourism here to the Indianapolis area and continue to assist with population growth.
Yeah, and I think the whole idea of building that stadium is to try to get into the MLS.
Yeah,
the MLS, right?
Yeah, exactly. It was one of the requirements that the MLS states that they have to have a private stadium.
Cool. That's exciting. That's all exciting stuff.
It's huge. I can't wait to see. It'd be awesome to be a part of that. And if you haven't invested here in real estate, there's no better time to start thinking about it.
Yeah. Indy's underrated, that's for sure.
Absolutely. Yeah. Although I don't know if it's underrated. I mean, again, Zillow is rating it fourth. The news is getting out. So
you're right. It is. Well, Chris, if you don't mind, I wanted to just highlight a couple of articles from the past, 30 days-ish that highlight some interesting things for the areas that we service that might be of interest to our investors. One of them, as you mentioned, the booming Boone County, which includes Lebanon. We talk about that a lot. We're going to go over that later in our market reports. But every week or two, there's some sort of crazy article about how much money is getting invested into there, and this is one of them. It's the title of the article is "Why Lilly is Pouring Billions into the LEAP District." And for those who don't know, LEAP is I don't even know what it stands for, but it is a district where it's just experiencing tremendous growth, and it's in and outside of Lebanon, and it's going to bring tons and tons of jobs, tons of economic opportunity there. It is just unbelievable. So let me just read you the first sentence, then we'll send a link. We'll include a link to these articles so you can read the whole thing if you want to. But the newest edition of the Eli Lilly manufacturing site in Lebanon is substantial by any measure. 7 large buildings spanning 1.2 million square feet and more than 15 fields in a row, including end zones. The new facility, dubbed the Lilly Medicine Foundry, is a small village unto itself with areas for offices, research, and manufacturing. It's a project of huge scale and costs $4.5 billion. And I think that's just their most recent announcement. They are just dumping tons and tons of money in there. So, we talk about it. We're already seeing it. Quick little sneak peek. You're going to see some crazy numbers in Lebanon, both for number of homes and average rental price. So stay tuned for that on the market report, because Lebanon is definitely poised for a lot of growth. The other one is near and dear to my heart. Just a little bit of a pet project here on this one. Third Shot Pickleball is planning an indoor facility in Carmel.
Let's go. Let's
do it. I love me some pickleball.
Me too. I love pickleball, and I know everyone watching here is a diehard pickleball fan. If you're not already, I guarantee you soon will.
No, but it does tie in. It ties into the community. It piques people's interest. It is an amenity that people want, and so to see these, literally up until last year, there was almost nothing indoors. There were some public parks outdoors, but let me just read you what has either opened or is slated to open. This is mostly Hamilton County, but there's this Third Shot one here in Carmel. There is the Dink House, which is also in Carmel. There's something that Drew Brees, the former NFL quarterback, he's part of something called the Pickler in Noblesville. Pickle on Penn, also in Carmel, that just opened. There's a 60,000 square foot 24/7 Dink Pickleball. That's at 116th and Brook School, so kind of Fishers area. There's Chicken and Pickle, which is also in Fishers. And there's another one, 105,000 square foot Fishers Community Center is going to have pickleball as well. So it is just going crazy. It has gone nuts here.
Yeah. I've heard a ton of things. I just happen to be over here in Hancock County, so I kind of pick up on first news of Noblesville, Fishers, And yeah, that development there in the Fishers area has been the talk of the town. I mean,
Yep.
pickleball's grown. Look, even if you have nothing to do with pickleball, you hear people talking about pickleball.
Yep.
So honestly, if I'm a real estate investor and I'm hearing about pickleball developments with this, as
Yep.
much as it's growing, it's almost as valuable as the information of the stadium downtown Indianapolis. Maybe not, but it's definitely valuable information. I mean, it's a growing trend, and I want to
Yep.
be part of a growing trend when I'm putting my investment dollars at work.
Well, you want to be part of a community that recognizes that and provides that to their residents, and then that's gonna attract people just into the area in itself.
Exactly.
So it's exciting to see the communities embracing that and add those amenities. The other one I just want to touch real briefly. It's just a little bit of some stats here, but Central Indiana existing home sales rise for the third time in the past 6 months. So they have just been, because of interest rates, because of inventory, the number of homes sold has just been declining. Actually, this is just the third month of the past 26 months that we've seen an increase, a year-over-year increase in sales. So just to highlight that. And then the last one, because we're kind of running long here, is, and this is just a proposal, but again, I think it just goes into showing people, investors, of what towns are thinking, like what direction they're thinking about going. But Whitestown, which again is kind of on that corridor up to Lebanon, they have a proposal for $110 million project this would be right up against 65. So again, on that corridor. So it's like a mixed use. It's a mixed use project with some retail in there, some apartments in there, some fast food in there, some mixed use multifamily in there, some senior housing in there. So it's a pretty dynamic project. But that's the kind of money that people are looking at putting into Whitestown. So I think last week we kind of said we thought Lebanon might take over Whitestown. Well, it looks like Whitestown might actually get a little bit of a boost from that Lebanon building as well. So those are the four that I wanted to highlight this month. We'll continue to do that and highlight these articles that are of interest to our investors.
Yeah, and absolutely. I would love if some of our investors would comment below. Let us know of other developments that you're aware of that are either in talks or already committed developments going on. We'd love to hear about them if we haven't already, and we'd also love to highlight them on future market reports. So be sure to share those with us. I'll tell you, my God, it seems like every town that is in the midst of forming is talking about a town center. Like, I've been talking about the one happening here in my neck of the woods here in McCordsville, and how excited I am about it. But it's mixed use buildings that are being developed, and it seems like, and I could be wrong, just because of how close I am to Fishers, it seems like Fishers was one of the first communities to have this town center development of mixed use buildings, and they've been hugely successful. Maybe where that maybe it's originated elsewhere, but it's almost completed here in McCordsville, and I know all of McCordsville super excited to go into this beautiful town center that's mixed use development with food and entertainment on the ground level, and then of course apartments and residential units above.
Yep, it's a super popular trend. I mean, Carmel has a nice downtown. I think Noblesville is working on theirs. A little bit older, the Noblesville one, so kind of a different vibe there.
Yep.
But yeah, it's definitely the trend for sure.
Yeah. I think Noblesville is trying to hold on to that historic vibe a little longer if they can.
Yeah. No, it's cool down there. It's just a little bit different. That's all.
Yeah. Cool. Well, that's going to wrap our economic update here for the Indianapolis metro and surrounding suburbs. So again, let us know if there's some other developments that you're aware of, you want us to be aware of, and check back next month for continued economic updates for these areas. Now we're going to jump into market reports, which I know everyone absolutely loves, including myself. So without further ado, let's get into what do the numbers look like in the Indianapolis market. Here we go.
Let's do it. So we are reporting on October's numbers. So, wrapped up really the height of the leasing season, kind of starting to prepare for kind of a little bit of an off season and get into the winter months here. So we're starting to see some seasonality, which I think you're going to see a bit of a trend for Indianapolis and most other areas as well. You can see that rental price over time dips both last year and this year, really peaks at August, September, and then dips for the remainder of the year, which is normal. So, I mean, don't freak out. Don't think the sky is falling. that is regular seasonality here in Indianapolis, and probably a lot of areas where you're going to see, have cold winters, and really everywhere. But it's actually kind of nice to see because it makes it a little bit more predictable. For the last couple of years, it's been wild. With all the COVID money and the stimulus money, it was just wild. So it's a little bit nice to see things kind of get back to normal, quote unquote. Although you
Exactly.
never like to see the trend line go down. That's just that is what it is. It's normal, and so that's what we're seeing here. That's what you're seeing. The month over month average rent is down 1%, but look at that, it's up 6% year over year, which is great. Average days on the market a little bit higher than what I'd like to see in September at 48, but not out of control like we've seen. We do expect the average days on the market also to tick up as we get later into the year. So again, that's kind of normal here. So average sales price, I say it every time, it's just so unbelievably affordable. 239, 332 on there. That's actually up from last year, 3%, and then down just slightly from last month. There's 900 almost of those homes that sold last month. So there's plenty of inventory to choose from in that very, very affordable range in the Indianapolis market. If you don't mind going to the next slide, Chris, I'll provide a little bit of context on the active homes and the days on the market. Active homes on the left here looks really good, really stable at or below last year's inventory. So that is definitely encouraging. And if you look at the red line on the right, the days on the market has been pretty consistently below last year. We do see a little bit of a pickup here in October, but I don't think it's going to get out of control. Overall, I'm pretty encouraged by these numbers with going into November and December.
Yeah. So let me spit my 2 cents here. And number one, so back to the Indianapolis overall market report, we're going to see a trend here between, as we continue to track and we become experts here on the individual markets here in the Indianapolis and surrounding suburbs. We're going to see a trend continuing with all of these average rents, like Mike has already indicated. Seasonality is important. I don't know if it's so much the cold. I would love to see some market reports. Like, what's Florida do? Do they have seasonality down there? I really don't know, but I kind of want to find out. But I mean, because it can't just be the cold weather anymore. Yeah. I mean, here we are approaching mid-November. I haven't turned my heat on. You know what? I haven't succumbed to that yet. All right. I'm still winning the race. No heat has been turned on in this household. And when's the last time it snowed in Indianapolis? I mean, one snow a year. So anyway, I think it's really seasonality really speaks to the change in vibe. Right after Halloween, I know my mindset changes, and I get this happy, giddy vibe of the holidays. We're getting closer to Thanksgiving. We're getting closer to Christmas. So that's the seasonality that I think kind of plays more of a factor. So we're going to see a continuation of decline month over month for your average rent. So numbers that I'm going to talk about a lot as we continue through these market reports is going to be our year over year numbers, which is going as we approach fourth quarter, as we get to the end of fourth quarter here, it's going to be a lot of conversation on how did we perform year over year rather than so much month over month. So that's where my mind is going to be at. And that goes for not only average rents, but our average sales prices. Average days on market, jumping to the next slide. If you look at the days on market, which is absolutely where my mind and my eyes go every time we jump over this slide. And it looks like consistency. I know I've said that before, but who as an investor doesn't like consistency and certainly predictable consistency? So I wouldn't expect anything dramatic over going in towards the end of fourth quarter here. Fishers. Look, I talked about Fishers last month. I brought it back into my nice warm embrace, and now I'm going to have to think about releasing her again. I mean, average days on market at 54. I mean, I'm not completely letting it go. I'm more like Rose on the door of Titanic. Like I'm going to have to just. I'll never let you go completely, but I'm going to watch it go to.
That was a random reference. I'd never heard that one before.
What do you mean? Everyone references the door there on Titanic. Anyway, look, average days on market at 54. It's up 75% month over month. 54 is, in all reality, all jokes aside, 54 is not crazy. If you have anything like managers like Red Door Property Management, you're smashing that anyway. But it's certainly not exciting when I'm thinking about putting new dollars into. So we'll continue to track this month over month. Average rents, again, here we are down 2.25 month over month, but that's nothing out of the usual. We're up 9% year over year, which is the most important factor here when we're talking about these data points.
That's the exciting number for me in this one is up 9% year over year, and it's consistent. It's not like a blip. It's not this month was good and last month was bad. That is consistent over the course of this year.
Exactly.
It has constantly beat last year. So that's the exciting part for me for Fishers.
Yeah, that's a very good point. Last month we were up just under 9%, and here we are just over the 9% mark year over year. So you're right, consistent growth throughout all of these market reports. Average sales price. This is one of the few I think that we're going to see positive numbers in. So, I mean, as I bash Fishers on the front end, I'm going to give it some grace here on the back end. Average sales price is up 1.75. I mean, not that much grace. I mean, we're only up 0.75% year over year. So anyway, let's get to the next report. Unless there's anything else you've got to mention on this one, Mike.
No, I'm good on Fishers here.
Okay, here we go. Let's get into some of these graphs. Your days on market, you can see exactly why it's been in my embrace, and then it gets released. I mean, you look at the days on market, it's all over the place. We're at 85 days. We're down to 30 days. We're back up to 54 days here in October. Judging by last year's graph, which we have closely mimicked, at least to some degree, I would expect we're going to see another days on market growth going into November, December. Yeah, I see your face, Mike.
That's nasty. 76 is kind of small for me, but I think 76, that is a long time on the market.
Yeah. If you currently own a home in Fishers and these numbers are getting you to consider selling, let me know. We'll help you out. We'll help you out on both sides of this transaction.
Yeah. I just go to show that you got to be realistic about your listing price and be really aggressive. If you're listing your home in September, October, you got to be fairly aggressive on your listing price, your asking price, because we don't want to see any of our investors even close to that 76 days on the market. Please listen to your property managers, price it correctly, make some cuts if you need to, because nobody wants a vacant home for 76 days. Nobody's happy.
Yeah, that's super good point. Listen to your property managers. In addition to that, if your property manager, if you're not working with Red Door, you're working with someone else, and they are not suggesting a 14 or 16-month lease agreement here coming into these winter months, then you're probably not working with the right person. That's absolutely the suggestion that should be happening here. You've got to get this thing on a turn time of June and July where those numbers look like something that you can live with.
Absolutely, man. It's such a good point. We say it a lot, but it just, you can't say it enough because everything is better. The price is higher in June and July, and the days on the market is lower in June and July. So I mean, it's like you want to be on that spring summer cycle. So if you have a vacant home now, start thinking about 16-month leases, 18-month leases. You don't want to have a vacant home if you can avoid it. I mean, sometimes you just can't, but you don't want to have a vacant home if you can avoid it in September, October, November.
Yeah, your ROI is going to see a dramatic difference between the two. Yeah. Noblesville. All right, let's get into Noblesville. I love Noblesville. It's consistently been in my warm embrace. I love Noblesville as a real estate market. Average days on market at 30, and that's down over 15% month over month, down 40% year over year. 30 days on market is amazing. Average rents, again, this is pretty consistent. You're down 4% month over month, which is a little bit surprising, but you're up approaching on 3.5% year over year. Active homes in the market in Noblesville at 118. Your average sales price for your investor point of view, and it's important to point out these are homes that would be in just that, the investor point of view, which is homes that have sold for under $500,000. So it's important to reiterate that. But we are up over 7%, almost 8% year over year, and up 5% month over month. So these are good, great numbers, even seasonality wise. I love it. This is great. Mike, anything to add there?
I love Noblesville. It's such a good market. It has been a good market. It continues to be a good market. It's just like little engine that could in terms of rental markets. It doesn't get too crazy. It just keeps on chugging along. So I still like Noblesville.
Yeah. Yeah, this is definitely one where Rose would allow him to stay on. Okay, we're going to let that one ride. Here we go. All right, back into our graphs here. Active homes over time, pretty consistent with last year. Nothing much to report. Days on market, we're trending right along with last year's numbers, and that was in my opinion, an unstable time of year. This I can't wait to get into next year's numbers, and we're rattling off 3 different projection lines there. That's going to be sweet to have all that data right here in one place. But almost the entire year I can live with. You had this little blip in March for Noblesville on days on market that trended up to 74, which was pretty consistent with the prior year even. So I'm kind of wondering what might have contributed to that, but pretty consistent going forward for the remainder of the year. These are numbers that are great, and I would imagine we will get into somewhere around 30 days on average going into November, maybe even into December, which would be absolutely crazy. We'll see what happens.
Yeah. I mean, it's heading in the right direction. It's below last year in terms of days on the market. Active homes is trending right there. I'm not concerned about days on the market at all.
All right. We're loving the Noblesville market. This is great. Stay tuned for the next couple months. We'll see what happens. Okay. Westfield.
All right.
What do you got for me in Westfield? Let's
sell everything.
Sell everything. Sell. Oh, what's
Hit
that? Kramer on CNN. Isn't his name Kramer?
Sell.
That's what we need. We need a little picture of Kramer.
We should pop up a little image of him. No, it's not great, but it's not terrible. But we did allude to this last month where inventory is creeping up, and it is a concern because we'll take a look at the next graph, but the active homes in the market is 127, which represents almost a 50% increase from last month. So I do want to talk about that. I want to show you something else real quick. Let me just talk about the other numbers, and then I'm going to circle back to active homes in the market. Okay. Average rents are ticking down, seasonality, but unfortunately, unlike Indianapolis and a lot of the other markets, we're actually seeing this down year over year. And days on the market is heading in the wrong direction, 61. So we're seeing some alarm bells here, and a lot of it is due to inventory. So it is a growing market. I would say in the short term, I am paused on holding or adding anything new to my inventory in the Westfield market. We got to work through some inventory here. As you know, I own homes in Westfield. I'm not selling them by any stretch of the imagination. I still love this long term, but in the short term here, it seems like there's been a little bit of exuberance. Maybe I got a little too excited on these market reports, and everybody started buying in Westfield because of this. But I think it's time to pause here for a little bit. But let me show you something that I thought was so interesting. Let me just share my screen here, if you don't mind.
Yeah, that's good. I love this info you're about to provide. And as Mike's getting ready to pull this up, one of the things that I've definitely seen with investors, and if you're already an owner with us, I've already shared this information, which is so good about working with an informed property manager. Because if you're already working with us and you have a new townhome, which so many of our new investors do, they've picked up new townhomes here in the Westfield area. You've already heard this come from me. I've sent you Loom videos. I've informed you that the competition in Westfield right now is something that you have to be in tune with early. You have to be in tune with this early. And I have personal experiences with investors that have recently signed on with some townhomes there that we've been ahead of it. We've informed them of the competition, and we've adjusted as necessary on the rental price, and we've been able to place tenants. Now, the competition that I'm showing that we're experiencing to our investors, they're not making those adjustments, which tells me that they're not informed. So based on that, that's just a little bit of an insight into what we're experiencing here at Red Door alone. Mike, I'll turn it over to you.
Yeah. So what I wanted to highlight here on the Westfield market was, I think we just lost that graphic, but I think it's like 117 or 124, something like that, active homes on the market. If you actually go to Zillow, you're going to see something different. You're going to see 315 rentals available. But what I wanted to highlight was the importance of knowing and drilling down into that as far as like, okay, well, what does that mean? That's a big difference. What's going on here? And a ton of it is what if you kind of zoom in and take a look. Well, I see a lot of multifamily stuff here. So there's a 29 unit, a 14 unit, a 16 unit, a 15 unit. So you got to know what your competition is. So you can actually drill down here and, well, for example, Chris, let's just take your townhomes for a second. Let's just say, okay, if I own a townhome, I want to know what my other competition is for just townhomes. You've got 40 other townhomes available in the Westfield market, which
is a smaller market. That's a small market in the Westfield. I mean, as they continue to expand, that is a small market. And Mike just told us there are 40 units, 40 townhomes alone
just townhomes.
in this small market. Man, that is a ton of competition. I love this breakdown.
Not everybody wants a townhome, so that's a bit of a sub-market as well,
That's right.
So exactly. The other thing that's interesting is if you take out all townhomes and all apartments, it brings it down to 70 available units, which that seems a lot more sustainable. So anyway, I just wanted to highlight that. Just take a look at the different types. We're going to see something very, very similar in Lebanon, where the inventory is creeped through the roof, but a lot of it is apartment complexes. And so anyway, I just wanted to highlight that to really know your competition. Know that right now, if you have a townhome, you're at a bit of a disadvantage in the Westfield area because you got a lot of competition, and there's a lot of multifamily on the market right now in Westfield. So anyway, that's what I want to highlight. I might do that again, Chris, during Lebanon to show a similar story.
I would highly encourage you to do so. I love that. And in fact, we may have an off podcast discussion about how maybe we should start doing that more in some of these other markets. I think that is so valuable. I love what you did there. That was such a good idea, Mike.
Cool.
Okay. All right. Enough about Westfield.
Yeah. Let's just take a look. Let's just take a look here at the active homes. And you can see that huge jump from, I think 85 to 127. That's about a 50% increase. And so that's not including the multifamily, which is interesting because they actually do it differently in Lebanon, but that is just single family and townhomes. And so that's a huge jump that we're seeing here, which I'm going to go ahead and, put a prediction in that we're going to see higher days on the market even more in November and December, because it's, 1 + 1 = 2. Higher inventory typically equals higher days on the market. So get real about your rental prices in Westfield, get it leased up, get through this season, and then you can reevaluate, next year. But it looks like a bit of a rocky road ahead for the Westfield market for the next couple months.
Absolutely agree. And you're right. I love that 2 + 2 = 4. Now, because the ones that we're seeing on the market right now, that's not the end of it. There is a tremendous amount of new construction happening as we speak. I don't even, that's probably a small percentage of what we're going to see over the next, I don't know, six, potentially 12 months. That inventory is going to get even higher. Your competition is going to be even more. So yeah, there you are. If you're looking at Westfield, you're glad you tuned in.
Yep.
Greenwood is my Noblesville sister. Average days on market, which is down 30% month over month at 26. It's super sweet. Average rents, which even are indicated to be 6.25 down month over month, we're up nearly 8% year over year on your average rents, with your active homes at 137, which is slightly lower than where we were last month in September at 141 for active homes. Average days on market, although it says it's down almost 30%. I mean, average days on market with the September market report was at 37, which is still a golden number to be a part of. So I'd love to see that ticking down as we are getting into the seasonality of the year. And let me just quickly brush over the average sales price for your investor point of view at 318, which is up 6% year over year, 4%, a little over 4.5% month over month. So stellar market to be a part of. Love Greenwood. If you give me a call, and you're looking for a market to be a part of, Greenwood is definitely going to be the top of that list of where I'm telling you to look to put your investment dollars.
Yeah, I mean, the fundamentals are good here. Average rent is up year over year. Days on the market, super solid at 26. Affordable rent, sales price, good solid market.
Yeah. And if you look over at that median rental price over time, just really quick, just to give us a little Well, I'll tell you what. Let's just jump over to this next slide. We'll talk about days on market. There it is on the right, which is exactly what I was going to say. I mean, if you got a home on the market here in Greenwood, you probably, at least indicated by last year's numbers, you probably don't have a whole lot to worry about. I mean, we're at 26 with your sneak. Let's see, 26 in October. And last year we're just under last year's number, which looks like it balanced out just over 30 all the way to the end of Q4. So I wouldn't be concerned.
Yep.
Report of Anderson. Now,
Anderson.
let me start with this one just by stating, like I do every time we start off the Anderson market, is that the value here is paying attention to this market over the long term. We're not going to see dramatic differences month over month in this market. This is a long-term play here. This is a buy and hold. Buy it now, hold it for the next 12 months. That's where we're going to see some numbers change. So if you're tuning in already, then you're going to be super thankful 12 months down the road that you are way ahead of the competition. So active homes in the market at 134, which is pretty consistent with last month at 131. Average rents, which are ticking up. So here's exactly what I'm talking about. Average rents, year over year, you're up over 8%. You're approaching 8.5% year over year. I predict that this time next year we're going to be at least at that, if not approaching closer to 10% year over year, if not even potentially higher. But that is certainly my prediction for a growing Anderson market. That's not going to happen overnight, but it is definitely going to happen over the next 12, 16, 24 months, without a doubt. Your average days on market at 24. I mean, what do you say there? That's down 47%. The days on market are stellar in the Anderson market right now. And then again, the highlight, the elephant in the room here is your average sales price at 175, which is still up 5% year over year. But what an incredible price for an entry point.
Yeah, we say this every month, but this is the affordable play, and this is the cash flow play for sure. And it's a little bit of a lesser known market, I think, to the average person. It's just a little on the outskirts, just a little bit. But I think as more and more people and investors get aware of this, we're going to see them purchasing more homes, improving them, and then pushing up those rents. So I'm with you, Chris. I wouldn't be surprised if this is easily over $1,000 by average rent by the end of next year. I mean, it's going to be a little slower, but I see a lot of upward potential here in the Anderson market.
Exactly, a lesser known market, which is, again, I'm going to preach on the value of Red Door. If you're tuning into these market reports, you've got the economic data on the front end. You've got individual market reports ranging from well-known markets like Westfield, which we're seeing a trending change, to lesser known markets like Anderson, where you can get in early. What a value add, my Lord. Yep. If you're not talking to Red Door, you're not talking to the right people. Let's get into our northwest side corridor.
Yep, the up and coming, as we mentioned in the intro segment, Whitestown does seem to have a lot going for it. They've got that $110 million proposed development. Looks like they're trying to ride the coattails of up and coming Lebanon and continue the boom that they have there. So again, a little underserved in my opinion. Only 30 active homes in Whitestown, which I guess we should really take a look at this as population, but that seems like nothing. 30 homes is nothing.
Well, it's pricey. It's pricey, isn't it? I mean, your new investors not looking at Whitestown as putting their first investment dollars. I wouldn't think. I'm posing that as a question.
No, this wouldn't be the first place I would look. This would be more of a long-term appreciation play, or if I had a home that I couldn't sell or didn't want to sell. This probably isn't my first place I'm looking. I would either definitely go to Lebanon before that. There's a couple other areas I would look before this for sure.
Yeah.
But there's definitely some long-term potential here. But you're right, it is pricey. I mean, look at that average sales price is $371, and that's even for homes under $500,000. So, but you got the appreciation. It's up 5% year over year, and then 3% month over month. So there is a long-term appreciation play there. You know, one thing that's super positive for Whitestown is they have so much of the industrial buildings there, right along 465. And the reason that matters is because that's huge tax dollars. Those are taxed at 3% because it's 1, 2, 3 is our taxing thing. It's 1% for your homestead, 2% if it's a rental, and then 3% if it's commercial or industrial. So all those things are going to get taxed at 3%. So Whitestown is going to have tons of money as a town, which is always a good thing. You can invest in schools and roads and all that kind of stuff. So Whitestown's got a pretty good future. Anyway, so active homes 30, average rent 2,200. We are seeing that see that seasonally tick down here, but that's normal. Average days on the market still a very respectable 38. A little bit high, but not too bad. So that is Whitestown, which kind of bleeds into Lebanon. Again, we had another highlight in our intro for the economic data about another I think it was 4.5 billion that Lilly's putting into the LEAP district up here in Lebanon. And I mean, it's just like up and to the right for everything except for days on the market. Look at that, days on the market is 8 days on the market. I mean, that is unreal. That is unreal.
It may very well be unreal. Stay tuned for next month.
yeah, it might be. It might be. Average rent 1,700, which is, look at that, up 50% from last year, up 2% from last month. And then Lebanon says, who cares about your seasonality? My average rent's going up no matter what you do, no matter what time of the year it is, right? And then average sales price still very, very affordable at 251. I suspect that's going to go through the roof as well over the next couple of years. I mean, I know it is. As you see the homes shift, the population shift, everything shifting in Lebanon. Go ahead, Chris.
Yeah. Before we get into any additional information you want to share using Zillow, which I think is valuable, I wanted to just add. I mean, talk about a great time for us to start adding Lebanon, which was added really by popular demand. People wanted to hear more about the Lebanon market as we talked about development that's happening in that area. But man, have the numbers. This is an area I do wish we were talking about this one a year ago. We are Anderson, because we are, by the time we got into Lebanon, which we're still early on, don't get me wrong, but we are seeing those dramatic number differences. I mean, look at your average rents year over year. I mean, if you compare us to any other informative source, I think we are super early on the market. But man, this could speak to, I don't know that we'll see quite this growth from Anderson, but I don't know. It's just, hopefully it's indicative of what we might be able to see long-term trends, where here we're seeing big jumps from these numbers. So it's just awesome to see these massive increases, right? Seasonality is not even a thing in Lebanon. The word is out about the development that's happening there, and people are jumping in. God, average sales price, man, at 251. Again, this is crazy. Last month, just to give you an idea, last month our average sales price was at 315, and the fluctuations here are going to be because of the growth that we're seeing there, where number of homes sold you'll see there is 18. So if we have a home that sells for 500,000, and then we have 4 others that sell for 150,000, well, those numbers are going to be so skewed when you pull out your median. So I mean, last month we were looking at an average investor price point at 315. So that just tells you it's going to be hard to gauge your average sales price, because there's so much difference between in lack of data only between 18 homes sold. So that's why you're going to see those massive changes there. So I would hold little salt with down 20% month over month and down 15% over. I wouldn't even worry about that whatsoever. Yeah.
I will say the one thing that we do need to highlight here for Lebanon is active homes. So we're seeing that trend up pretty significantly. September, for example, was 57. This month is 75?
Yep.
Actually, if you look right now, this is what I want to share with you guys. Very similar situation to the Westfield market, where we're seeing a huge increase, but it is in multifamily as well. So let me zoom in here just a little bit. If you can see, we actually go from 75 from when the October data was pulled to right now there's 106 available. So that's a huge increase. But zoom in, and then like it looks to me like maybe this 60 unit apartment complex just hit, and or this 20 unit apartment complex just hit, which affects those numbers tremendously. Because if I pull apartments and condos out, back down to 12 rentals. So there's only 12 homes available for rent right now in the Lebanon market. So if I'm multifamily, maybe I'm not super excited about going in there at the moment. But single family seems like there's lots of opportunities still for an investor here in the Lebanon market.
Yeah. And just to be super duper clear, the reason you wouldn't be super excited about getting into multifamily is because of the competition. Yeah.
You've got 80 other units that just hit the market. I mean, they're going to want to lease theirs up as quickly as possible as well. So it's, a little bit of a race to see who can get their stuff leased up first, which tends to lead to,
Lower prices.
Lower pricing, incentives, all that kind of stuff. So
Yeah.
anyway, just wanted to highlight that although we are seeing an overall huge increase in the number of units on the market, it really helps to dive into those numbers and say, okay, well, the vast majority of that's multifamily, which isn't really competition for somebody looking for a single family. I mean, it is a teeny bit, but the overlap is pretty small.
Yeah,
as far
exactly.
as people looking for that.
Yeah, exactly. Just slight overlap. So that wraps our Indianapolis and surrounding suburbs market reports. I hope that you found it super valuable, all the way from the front end economic data all the way to the tail of incredible insight provided by Mike there on the Lebanon market report. It's incredible insight. We'll try to add more of that. I think that's super valuable to have. If you have any questions, comments, a new investor, you're looking for a place to put new money, or if you have interest in a property that you found, but you're not sure what it's going to rent for, reach out. Happy to provide a free rental analysis at any time. You can find our information on our website, reddoorrents.com. My email address, which I'll try to even share more. In fact, you can reach out to me directly at cnight@reddoorrents.com, cnight@reddoorrents.com, and shoot me over a message. Happy to provide any information I can at any time. And of course, this is a lot of data that you're going to want to stay in tune with. So if you haven't liked and subscribed, you better do that now. We'll see you next month. Thanks, guys.
See you guys.